Well, hello. Welcome to the weekend video for bullwaves.org. I'm going to get into this quite quick and get through it, and I promise this time I won't go for 45 minutes, just blathering on and on and on. I'm going to keep this to hopefully about 10 minutes, and I'm just going to give a quick run through what has happened this week and what I think this might lead to next week. So I'm going to start with euro dollar here, as per usual. As per usual, I've got a hoarse throat, and I sound like Barry White, but you'll have to just stick with me if you can. All right, euro dollar. We've had this kind of ranging action over the last week or so, and it's beginning to look like a triangle here, and so far so good. I mean, it's quite plausible to count these internal waves as three wave patterns. This particularly the initial wave here, wave A, labeled wave A, that definitely counts as a three-wave structure. Wave B here, yeah, I think you could definitely maybe a triangle there, ABC structure. Wave C, possibly three-wave structure again. Monday, well, the overnight probably, the Asian trade Sunday night. Well, first of all, we have to stay below this resistance here. It's 116.90, as I mentioned, and we need to see a decline into that lower trend line there. So both this triangle count, which views an ongoing contraction of the price in three waves into a complete wave 4, which then suggests further decline into wave 5 into the lower trend line. Both this operating count here and the alternate count both view, say, Friday's high here as the high to watch out for, and they both view wave 4 as completing at these levels and declining into wave 5. So for Monday, we want to see. I'm going to stick my hat out and say that we'll see a completion of this triangle on Monday, Tuesday, and then a decline for the rest of the week into the lower trend line there, maybe about Wednesday or Thursday, but we'll see how that works out. As usual, we'll track it day by day as it happens. But in general, I think we'll see a closeout of this 5-wave pattern soon in brown. 1, 2, 3, 4, and then 5 down. So that's what we'll be looking out for next week, is further consolidation here and a decline into the lower trend line. Okay, let's move on. That wasn't so bad. Move on to pound dollar. Get rid of that. The 3-wave pattern, ABC pattern, worked out quite well. Initially, I was counting this as wave 2 complete, and the declines off that just overlapped too much, so it just suggested that this larger wave 2 was occurring, and then we got the spike into the 132 there on Friday that we were looking for. So from here, I want to see lower high and then a decline. That's quite simply putting it. That's simply put. What we should be moving into is wave 3 pink of wave 3 brown. So wave 3 of 3 should bring acceleration to the downside. And I think this kind of resistance support level here, 131.78, that should act as, if we get a decline below that, we should see a wave 1, 2 to the downside, and I think that wave 2 should stay below this resistance support, definitely below the 132.29 high I think we got there on Friday. So we had the initial decline on Friday evening. For Monday, let's see how that develops. If we get a further, like at this moment in time, we have a 1-2 pattern at a minor degree, so that's complete Elliott wave signal at that point. How you want to trade out from there is up to you. I usually like to wait for a further confirmation lower high, and then use the nice tight kind of stop as something to trade off. But that's up to yourself, obviously. We all have our own methodologies. Some people like to enter at the previous wave B low, kind of a half position maybe, and then a trigger position here at the wave 1 with a stop, the ultimate stop there at the wave 2 high. But it depends on the kind of instruments you're using. I kind of tend to stick to spread betting. That's kind of what I know. I probably should kind of branch out further into the spot market itself, but I've always kind of traded spreads, and that's kind of what I stick to. Anyway, so for Monday, I want to see a lower high and to create a nice tight stop. That's ideally to create a nice tight stop. But first, we need to see development of this initial decline here below the resistance support level. Okay. Good on you, Ender. You're doing okay. You're doing okay. Quickly, you're getting through them quite quick. So let's keep it going. Okay, dollar yen, and don't mind me. I'm just talking to myself. I'm going to go down into the 30-minute there for dollar yen. I'm on the hourly chart there. So it is possible that on the short-term chart here in dollar yen, first of all, it's possible that this wave 1 high completed, and now it is also possible that we have, well, just by glancing at that, you can see that that's all corrective action as part of the same overall wave structure. But it's possible that this bounce on Friday, the fact that it kind of broke up through previous interim lows, almost into that low, did it? No, just about, didn't break it. But the fact that it kind of it bounced on Friday there with if you can see it, a 3-wave decline and a further impulse bounce. So this is kind of interesting action in my book. It's possible that we have one. Oh, am I going to be able to draw that? Let's see if I can. Let's see if I can pull that a little bit wider. 15-minute chart, maybe. Now, it is possible that we have either 1, 2, 3, 4, maybe a triangle wave 4 and a 5, or this is really this. I'm probably concentrating too much on the short term here, but maybe a wave 1 into this high, and maybe an expanded flat wave 2. But it's possible that we have an Elliott wave signal off the low here at a very short time frame. This needs to develop a little bit more in order to be, obviously, in order to kind of trust it, to have a little bit more trust on it. Let's get back out again. But what I'm looking for, obviously, is if this is, if that low there, 113.08, is the end of a running flat. So that would be A, B, and then C. Then that spike high on Friday could be the beginning of wave 3 again of wave 3. So it's in pound dollar, it's the opposite of this. It's a wave 3 of 3 to the downside. In dollar yen, it's a wave 3 of 3 to the upside. So we've got a nice kind of correlation between the opposite sides of the trade here, of the opposite FX markets. So euro dollar and pound dollar are both pointing down with an acceleration phase to come to the downside, and dollar yen is pointing up with an acceleration phase supposedly or likely to come to the upside. So this kind of correlation across markets is something to look out for. So the question is, do we have the low already in at the 113.08 there of Friday? If we see a larger kind of 5-wave and 3 waves, that's the point where you'd use a trigger there. That would be a solid lower degree Elliott wave signal. I definitely want to see a break of this resistance 114.42. It's kind of bounced around that for the last 2 weeks now. We haven't got a clear break of that. So for the early next week, we want to see a completion of a kind of a lower degree signal off the low and a nice run up in wave 3 of 3. Okay, get out of dollar yen into the stocks. Okay, so As I've explained before, this chart is obviously my spread account. It's not the actual cash DAO that I'm looking at here. This is a derivative of it, and so some of the price highs and price lows are slightly off, but I concentrate on the cash market in the analysis. So the levels I have here are the actual cash levels. The all-time high recently, 23,600.6. That's the all-time high. Okay, since that point, and we were tracking the kind of closure of this possible ending diagonal, and that was last week. And since that point last week, we had a nice spike to the downside. So that's exactly what we were looking for, a spike to the downside, and we could possibly have a 1-2-1-2 in the making. I've shown here an alternate count here showing that 1-2 in pink is already complete, but I'm not so certain about that. So on Monday, I want to see a kind of development of this three-wave pattern here, A, B, C, into a kind of possibly a zigzag. Now we could already have B in place here. We could have an A B in place at that level, and we might get a C up to the trend line again. We're looking at a rally into 23,500 again, and then a spill down into wave 3. But that's, first of all, I want to see a completion of this of a three-wave pattern off, say, Friday's low, and then we should have a completed 1-2, 1-2, and then wave 3 should come along. So, I would tentatively say that this could well be the all-time high. That might come back and kick me in the ass, that statement, but this 23,600, that point there, I mean, that, going by the bearish wave count here, this could be the one to remember, the one to tell your grandkids about. Well, we'll see how that works out early on next week. So we definitely have impulse moves to the downside and corrective moves to the upside. And like I was saying earlier, or during the week there, we're building a head and shoulders top here, and that coupled with just the extreme bullishness and the extreme kind of stupidity. There's no other way to kind of describe what's happening in the market right now. Plus, we had a spike in high yield, which points to a kind of a risk off. The proclivity to risky behavior kind of dying off. So, there's a few compounding factors here, and this is definitely on my radar, one to watch if we're getting a development of a top here in stocks with the outlook that I have, which is for a complete retracement of at least the rally that we've just undergone since 2009. So that was down to the 6,000 level. That's a hell of a decline, and that's 75% decline right there. Should that happen, good Lord, watch out. Empty your bank account. That's all I'd say. Right, so for next week, let's see if we get a 1-2 pattern and we get 23,500 with further lower highs to kind of give you some sort of maybe trading entry. Depending, a lot of people, I suppose, would use different instruments to kind of to trade this, but probably puts, I suppose, is how most people would play this. But I think we're looking at an interesting position, an interesting point right now, and it's up to us to kind of sit up and take notice and just listen to what the market is telling us. It's screaming to me right now, but let's see how this develops next week. This is going to be the most interesting point you might remember for the next 15-20 years. So let's move on to gold. So on Friday, we had a kind of a spike to the downside. It could be an acceleration in a minor wave 3 to kind of cap off a 5-wave pattern in wave C of 2. So let's see how this plays out. What I'm expecting next week is a continuation of this decline, at least into support at 1261, and completion of 3 waves in wave C. So then we'd have 3 waves in A, 3 waves in B, and then 3 waves in C, which would complete a triple combination wave 2 green, if you're following me. Let's get out to the 4-hour chart. So that would be a triple combination of that previous extreme high, 1357. So A, B, and C. So we're watching for the completion of this final little C wave in that trend channel. In general, gold is just been so maligned. It's just been sitting in this kind of drudgery, this sideways drudgery for months now, 6 months at least. And I think it's time. I think it's high time that we see a kind of snap out of this kind of sleep that gold seems to be sitting in right now. So for the moment, we want to see a little decline into the, let's get back to the short-term charts there, into the, well, the lower trend line would bring it down to the 1250 area. So let's get our crosshairs out there. If you meet the lower trend line, it would bring us into 1250. If we, at a minimum, want to break 1261.08, that would be the previous low here. So that's the outlook for early next week, is continued decline in 5 waves to break at least 1261. And at that point, we'll look for another signal to the upside. But in general, we're closing out, I think, a very large corrective phase. And again, if gold acts as a kind of a kind of a counterforce to a developing bear market in stocks, I think gold could rally quite significantly in the near future. Alrighty, so we'll track that one with interest on Monday and Tuesday. Okay, so crude oil. Now I introduced this kind of triangle here on Friday. This sideways action just kind of it points to a possible developing triangle. Now I'll kind of view that as another possible alternative. So if we see a continued contraction in price range on Monday, well, then it'll probably swing towards this triangle wave 4 idea. So if you were to look at that, that would be A, B, C, D, E. So what you should see is a kind of another higher low, and then a break of resistance to kind of bringing you up in 5 waves in wave 5 of 3. The other way of looking at this, the way I've counted it, would be kind of like a triple combination, or sorry, a double combination. A, B, C down in A, spike up in B, and then an A, B, C into wave C. The initial support was 56.41, and if we get a pop below 56.41, that would confirm this particular wave count, and then again we would be expecting a rally up in wave 5. So no matter which way you slice it, you could have a nice little rally up to the upper trend line there. We're talking about, let's see if we can get a price on that, about $60. $60, give or take a chunk of change, and that would complete wave 5 of 3. And then in the larger pattern, then you'll see wave 5 of 3 complete, and then probably a decline into previous support again. So we're looking at a kind of a head and shoulders, a midterm head and shoulders here within the larger pattern, and that would complete wave 4, and then you'd see a rally in wave 5. Right. In general, in in crude, the larger pattern is holding quite well. We've had our a run out of the wave 1 pattern, a completion of the triangle, a run out of the wave 1-2 pattern, and a nice impulsive move up, wave 3 blue. And we're looking at completion of wave 3 blue. The 200 period moving average is acting as a nice support now. And I think in wave, let's say we get 1, 2, 3. Let's get a mark on that. So we have 1, 2, 3, 4, and then a move up in wave 5. So I'd say wave 4 blue should come probably back down to meet that 200 period moving average at that point. And then we'll get a bounce up and again another say head and shoulders pattern off that eventual high. But the target for $70 is still quite possible from here. So that was a larger kind of target. Let's get out to the daily chart. Yeah, we had a target there for wave 4 of about $70. So we'll be within that range. That trend channel to the upside will maybe not be hit, but it would be within that kind of target range there once this impulse pattern moves out. So we've got 1, 2, 3, 4, and then 5, and that's the blue labels that I was talking about. So that completes this week's review video for next week. Euro dollar and pound dollar are looking for further declines. Dollar yen, we're looking for a nice impulsive rally. Stocks, we're looking for a kind of a continuation of a larger decline or beginning of a larger decline, and maybe a decent Elliott wave signal off the high. For gold, we're looking for a completion of the correction and a rally. And for crude, we're looking for a continuation of the of this wave C rally here. So that'll close it out for me. I hope you have a great weekend, and we'll talk to you again on Monday. Hopefully without a sore throat. Okay, God bless, guys. Have a nice weekend.